Okay, welcome all. Lenny Hayes here, and just touching base on the markets. So, obviously, we touched base last week after a somewhat subdued few days, and we've opened up this week, beginning with a bank holiday in Europe and the US. So, look, what was important about that is that we did actually get a debt ceiling agreement. Well, a tentative agreement over the weekend. So in the late hours of Saturday night in the US. So that flowed through into markets over the weekend, and we saw in Asia markets trading upon that news somewhat in the Monday session. We saw the US dollar mainly mixed, and we did see a little bit of a move in the Australian and Kiwi dollars. That rose by about 0.3% to close the day, but most of the attention was drawn to today's events as we saw US cash bonds open in Japan, and then we saw the opening of the US and European markets. So it did throw up a lot of volatility, actually, especially in the currency markets today. We saw the S&P 500 futures contract rise by about 0.3%, but we saw the Aussie chop and change a substantial amount. We saw it, and coinciding with month end flow as well. It did wreak a lot of havoc across markets. We saw it accelerate quite quickly up to 65.60 early in the session, and then plummet all the way back down to the figure 65 figure mark. We also saw the euro dump through the 107 mark, but it's since recovered and it's up back over 107.40 now. So extremely volatile conditions on currency markets, and not too sure if that's the debt ceiling news playing at hand there, or month end flow and US dollar movements. However, the US dollar index is down 0.3%, and that's got to be probably attributed to the debt ceiling agreement there. So S&P futures have risen 0.6% now. They're yet to open. European equities are performing okay. The DAX is up 0.5%, and the FTSE is actually lower, 0.5%. The Nikkei and Hang Seng recovered to finish in the green. The Nikkei was up 0.3% and Hang Seng 0.25%. ASX, not so pretty. It ended in the red with a loss of 0.1%. And bonds opened up mixed in the Asian session, but we have since seen the yields on Treasury bonds in the US slump. I think the 10-year, we can see now the 10-year bond is down now 9.1 basis points, and similar in the UK with gilt yields down 3 basis points, and German bonds 6.4 basis points lower. So interesting moves, especially in the FX markets overnight. I mean during the Asian session, but in terms of data, we'll wait to see what non-farm payrolls throw up at the end of the week. And we've also got the crucial vote, which is on Wednesday in the US Parliament, to make sure this agreement actually gets passed. So look, that'll be a crucial a crucial vote for the market, and it'll be watched with close attention. We do know that there's only a slim majority in the Senate. It only takes one or two members to disagree to throw a huge spanner in the works. So that's going to be the next event that's going to be monitored, and it'll be looked at with close attention. But we'll see what happens, and expect some volatile periods if that vote doesn't go through as expected. Anyway, that's all for now. We'll touch base on Thursday, and we'll hopefully be able to talk about and unpack where everything's sitting by then. Thanks all for listening, and talk to you later on. Thank you.